A very warm welcome, everyone. Thank you for joining us today for our webinar titled AI Solutions for Investment Advisors, How to Choose the Best Fit for Your Investment Process. I'd like to begin by introducing our speaker. Josh Ferruggio is a Director of Sales at Boosted AI, responsible for business development in the Canadian investment advisor market. With almost a decade of experience in the financial services industry, Josh has held various business development positions in asset management and investment research, focusing on mutual funds and equities and specializing in responsible investing. Prior to joining Boosted AI, Josh worked at Brandis Investment Partners, Aviso Wealth, and Morningstar. He holds a Bachelor of Commerce degree from York University and was also a contributor to the Globe and Mail. Without further delay, I'll pass it on to Josh. Please take it away.
Thank you, SK, for that introduction. And first of all, thank you all for attending our webinar, AI Solutions for Investment Advisors. I'm based in Toronto, Canada. Extremely excited to have all of you join us as we're going to go through some really great content today. So that being said, let's take a look at our jam-packed agenda for this afternoon. We're going to look at the advancement of artificial intelligence in finance, why it's important for investment advisors, factors to consider when choosing an AI platform, and we'll be addressing this really throughout the entire presentation, current technologies in the marketplace. We're actually going to take a deep dive into the platform, and I'm going to show you guys how advisors are actually using Boosted AI and tips to get you started on your AI journey. So the world is complex. There's so many pieces of data driving market movements. 75% of overall trading volume in major global equity markets is generated through algorithmic trading. Decision makers really need to compile that information and make informed decisions in a timely manner. And AI allows you to capitalize by using big data and getting results. And now it's becoming table stakes in the world of finance. We can see here Morgan Stanley testing an open AI-powered chatbot for 16,000 financial advisors. On the bottom left, we see the CFA Institute saying that successful investment professionals will be those who can understand and best exploit the opportunities brought by these new technologies like AI. And then in the bottom right, we have Dave McKay at RBC, the CEO, talking about the transformational power of AI. It's not just a trend, it's an actual adoption phase in the world of finance. So here's a bold statement. Advisors have to quickly adopt AI to remain competitive. Forbes Insights produced a study on AI and wealth management, surveying 100 high net worth investors. Almost 80% of that group had a net worth of 1.2 to 11 million US dollars. 82% believe in the use of AI in wealth management and are interested in using it to manage their wealth. Out of that group, 67% want their wealth manager to adopt it immediately, and almost 60% say their wealth managers who don't embrace these technologies will not survive. These are your clients saying these things. And to add to all of this, it's not just concentrated by geography. These investors are global. But there's a risk here. You could either lose an $11 million account today, or on the flip side, the opportunity, you can simply gain one. Now, what if I told you that this was a study actually done in 2018? You could only imagine what the exposure might be today. Not only are your clients looking to implement AI, but the regulators are too, and are doing so today. For those not familiar with the Canadian landscape or not Canadian on the call, IIROC is a governing body that oversees all investment dealers and trading activity on Canada's debt and equity markets. And in 2020, they actually announced a 3-year strategic plan that addressed technology development by implementing NASDAQ Smarts. It's a trade surveillance platform, opening the door for them to use artificial intelligence. And in addition to all of this, there are increasing guidelines around know your product and suitability requirements, not just happening in Canada. Regulators across are forcing representatives to know their products that they're recommending for clients and having proper support material for trades. And there are AI tools out there that can simply do that for you. So we talked about how AI is topical in finance today. We outlined that your clients want it. And more importantly, the regulators are even on board too. So what are the misconceptions when it comes to AI? I've narrowed it down to 3, getting right to the core as to why advisors simply don't want to look in this direction. Number 1, it's too complicated and I don't feel confident talking about it. Number 2, my clients simply don't care. And number 3, my current investment process works, why change? So let's address the elephant in the room. We simply just don't feel confident enough to talk about it. But it's actually not that complicated at all when you break it down. Artificial intelligence refers to the ability of machines or computers to perform tasks that typically require human-like intelligence, such as learning, problem solving, and decision making. Now let's look at it in the context of finance. Machine learning is a subset of artificial intelligence where algorithms, a set of rules telling a machine how to solve problems, can adapt and learn based on information given to them. And the best example is when to buy and sell stocks. Very easy to understand, right? In fact, I bet majority of the people on today's call are using AI and don't even know about it. Next time you're watching TV and you got your favorite Netflix show on or favorite Netflix movie, think about the use of AI. As users browse through the company's website or, their platform in terms of looking at TV shows and movies, they're employing artificial intelligence and machine learning to determine which visuals are most likely to captivate each viewer. But overall, bringing it back to finance, there are platforms out there that provide data-driven insights that are explainable and easy to communicate with a client. Let's look at number 2. My clients don't care about it. Well, we know that's not true because we addressed it earlier on a previous slide where high net worth investors actually do care about it. But let's take it one step further. Accenture published a study in 2022 where they interviewed 1,000 wealth management consumers across the US and Canada. And one of the 5 challenges highlighted in the study was the intergenerational wealth transfer. Listen to this, 68 trillion is going to be expected to pass from the younger generation to the older generation. Younger investors are twice as likely, 2 times as likely as their older investors to trust financial advice generated by an algorithm. So you can see there, almost 80% of millennials and Gen Z investors versus 38% baby boomers. They aren't that young though, right? When we look at the oldest millennial, they turned 42 this year. They're making contributions to the economy and can make a difference in your business. And then finally, the last one, my current investment process works. Why change what I'm doing? I've been in the business for 20 plus years. You know, we hear it from time to time. And the best answer I can give you is save time. 50% of an advisor's time is spent in client meetings. 5 to 6 hours of their week dedicated to investment management. So cut that time in half. Why not increase that 50% to 60 or maybe even 70? Because the more time you spend with clients, the better experience they're going to have, more engagement, and even stickier assets for you and your business. With that, let's transition to Boosted AI. We work with institutions and investment advisors to solve the equity side of your business by utilizing artificial intelligence. We started in 2017 with offices in Toronto and New York, 60 plus members, 2/3 of which are machine learning experts, data scientists, engineers, and developers, along with finance professionals like myself. Our clients, they're global. We began working with institutional managers, help build the infrastructure where they can take advantage of quantitative tools, help them in a fundamental way to do a better job of simply systematically investing. Now we're in the investment advisor market, and we definitely see that there's a need for retail to adopt a similar process within their own advisory group. This is a quick little snapshot of the backgrounds and where we came from. But Boosted AI in its simplest form is going to help you streamline stock selection by generating quality ideas, leveraging stock research, and allowing you to continually monitor those names. We have finance-specific machine learning algorithms that power all of our strategies, proven strategies that are unique by universe, style, and sector, easy to use, no programming required whatsoever, web-based, point-and-click usability. And the last point, we are explainable and transparent. We provide reasons for why the machine is making a recommendation, priding ourselves on providing that glass box approach rather than being a black box. We're going to help you augment your investment process by 3 ways. Number 1, monitoring. You're going to monitor existing and potential investments and your firm's top of the house recommended list. Take real-time AI insights, view insights from multiple strategies, getting a comprehensive view from that lens. Number 2 will be idea generation, the ability to spark new investment ideas and find market-moving trends. And number 3, taking a look at single name securities and a deep dive through an AI lens, discovering new insights and perspectives. So we went over Boosted's offering, but how is it different than other technologies out there? What's so special about it? Well, many of you are familiar with a traditional rules-based approach. Most stock screeners and platforms simply follow this format. You select your universe of stocks, you apply your buy and sell rules, and then from there, you kind of really stay within that same bucket. It doesn't really adapt to changing market conditions. And most of the time, because you're staying within that lens or that small little bucket, you have an insufficient number of stocks that meet the criteria. Second approach I want to highlight is linear regression. Drawing a line of best fit through a space, trying its best to fit the prediction to the data. It's less effective with more data. And the data itself actually needs to be extensively curated. The third approach I want to highlight is machine learning, more toward something more basic like random forest. Here we're creating decision trees where we're training itself on historical data and finding patterns within that data. It's a better result than linear regression, but the problem is that it's vulnerable to regime shifts and it's correlated to those traditional techniques that we just went through. And finally, our proprietary finance-specific algorithm, Battle Royale noise reduction. What we do is we emulate the human investing process. We compare each security in the universe against each other. It's uncorrelated to those traditional techniques. It's explainable. There's less volatility in selections. And best of all, it's dynamic and robust to regime shifts. Whether we're talking about inflationary periods, COVID, or the 2008 crisis, we conduct a bottom-up analysis of every security based on the variables that we tell the machine to learn on. We compare every security against each other until we break our universe into quantiles. Top 20% being our best ideas, bottom 20% being our worst ideas, or simply stocks to avoid. And in addition to this process, we then look at factor timing, AI accuracy, and market conditions to see if these stocks are actionable. So we took this approach and put a case study together, and we ran SPY starting in 2004 using daily trading with 3 different algorithms: linear regression, random forest, and battle royale noise reduction. And we used identical data for all. And as you can see, we delivered low correlation to those methods, but also better risk-adjusted returns. This is a chart here where you're going to see Battle Royale noise reduction in yellow and the other 2 in light and blue. And you can see that we significantly outperform those 2 approaches. So I want to show you guys how advisors use Boosted AI. And what we'll do in particular is we'll jump into the platform where we can see so. So this is our strategy library, but before we get into that, as I mentioned, our platform is web-based. So our strategy library is going to show a different universe, style, sector. We even break it down further into how our models are published, whether we're looking for idea generation, producing fresh weekly ideas that are actionable, or simply direct trading in which you can follow like a core model portfolio. I want to show you in particular the dynamic ability of our models. And I think that's going to give you a really good visual as to what's going on behind the scenes. So on this page, we can see performance, we can see holdings, we can see trades, rankings of the entire universe, and reasons as to why they're ranked in the position they are, and even AI accuracy. So we can have it all here. But I don't want to focus on that. I want to show you explainability and our feature word cloud. And what you're going to notice as you scroll down below the word cloud, we've told our machine, our investment committee, sophisticated quants, finance professionals that are building our models, we are taking these 43 variables and telling the machine to learn on it. And it's a balanced approach. We're looking at mainly fundamental here, but we also have some macro variables. We also have some technical. These are simply fixed. They align with our investment philosophy and the mandate itself, and it does not change. What does change, however, is the feature importance weights. As we go through different points in time, different periods, you're going to notice the word cloud is changing. The machine is smart enough to understand what is important and what variables we should be looking at in those particular timeframes. I also want to show you in particular how we rank our universe and split out our performance. The top dark green line here will be our top 20% best ideas, whereas the bottom dark red line there will be our bottom 20% worst ideas or stocks simply to avoid. This actually all funnels through our platform. And the first use case of how advisors simply use Boosted AI is through the watchlist page. Here you can access all strategies. You can line them up however you like, whether we want to look at value, momentum, growth, something short-term, something long-term, we're able to do that and change which strategy viewpoints we want. We can add any security we want as well. And in addition to that, multiple watch lists. You want to divide your Canadian stocks, US stocks, or maybe go more granular and look at small caps versus large caps. But the way advisors are using this is simply to monitor head office picks. You simply get more frequent updates because our machines are actually able to show you that. Head office models are typically, updated quarterly. They're more low turnover. So advisors are really using this as additional insights so they can stay on top of the names that they own and provide their clients more up-to-date information in meetings. So another thing that you'll notice, though, each strategy will rate stock in a different way on a scale of 0 to 5, obviously 5 being the highest, 0 being the lowest. And what you can do is you can actually sort by the average or the composite of multiple strategies. From here, we could actually drill down further, and this would be the second use case. So here I have Dollarama on the top of my list. Seems to be a strong buy across the board except for our tactical model. But if I take a look at our more strategic Canadian model, I'm going to take a look under the hood as to why Dollarama is a strong buy. So right then and there, an advisor has the ability to leverage stock research, but not only that, knowing their product and having proper trade support materials so that they can be confident in those high conviction ideas that are popping up on their radar. So Dollarama here, we see the recommendation from the machine. We'll also see the star rating on, again, a scale of 0 to 5. We'll see predicted excess return. So this will be relative to the TSX, which happens to be the benchmark in this case. We'll see our risk reward level. And then we'll also notice its profitability factor score, its volatility factor score, and its 3-month market conditions are all lining up for us to believe that this is a trend continuation buy. Further down, we're actually going to see its share price relative to the benchmark. So the benchmark being that darker blue line, and then the light blue being the stock itself. And we can see when the machine has actually rated it a 0 to 5 scale along price chart. But in addition to that, we'll see its rating from the machine level, whether it's an underperform being a red ring, neutral, more gray, and outperform being a green. You can see we did a pretty good job of timing this one here. On the right-hand side, we're going to see AI selected comparables. So you can notice that Dollarama is a discretionary company, whereas we're looking at staples, industrials as comparables as well. So we're looking at that bottom-up analysis, also seeing factor timing, its AI accuracy and market conditions. And if they all line up and it's a similar in its approach, we're going to recommend it from that lens. And then at the bottom, again, addressing support material. What are the reasons driving performance here? We see expected long-term growth, dividends price to ratio, from a bullish perspective, but also a bearish perspective. So really need to see it from that lens, again, drilling down on a stock level. Then we can also see our ideas page. This has simply replaced the Monday morning meeting, a quick snapshot of the best ideas. So here we can actually place any strategy, again, that aligns with what we're trying to do. But what you'll notice is a quick snapshot, all the strong buys and strong sells of what this AI analyst or strategy is telling you. Best of all, we can actually get recommendations from different time horizons. So if we're looking more long-term like we are right now, 1 year, or maybe you got cash coming in and a client wants to invest today, what are actionable stocks that I can look at? So we can change that time horizon. From the strong buy recommendations or even strong sells, from here we're going to see the actual name of the company, its rating from a boosted level, its risk reward, but even predicted excess return. And then again, very quickly, what are the top 3 drivers? And then our natural language processing telling us the reason for this play. And here we see it as a trend reversal buy. I'll leave you with a couple more points here before we switch back to our presentation, but sector rankings is pretty important as well, because we can do attribution analysis as to what is really trending in the right direction. We can tilt our portfolio in certain directions as well to capitalize on that. And as you can see, this is the rankings over the next year. Whereas we can also see how they've moved to our delta here, our delta horizon, how these sectors have moved in the last month. And we can change that as well. And then on the left-hand side of that, our top rating moves from a positive and negative standpoint. Again, on that scale of 0 to 5. So here we can see the momentum score of its 0 to 5 boosted level, and really need to see at a stock level in the entire universe. So I'll flip it back to our presentation. I want to leave you guys with, a few tips before you kind of get started on your AI journey and learn more about it. Number one would be, looking for accurate and explainable AI. We talked about a glass box approach rather than a black box. I think that's super important to understand, number one, the inputs that are going in, but also the outputs. What is the machine saying? And then the human and machine combination. We're not here to replace investment advisors. We're here to simply streamline that process and save you time so you can spend more time with clients. Every element of our machine allows the human to kind of intersect, whether we're building our model, whether we're going through those different use cases. Number 3 would be the quality in terms of the data itself. I didn't highlight this, but we have data providers from FactSet, S&P, macro data directly from the Fed, ESG data from Owl Analytics, S3 partners giving us more technical data as well, and ORATs for options volatility. This is quality data that's going into our machine. In addition to that, you want a dedicated team of professionals that can really support you throughout this journey. Our backgrounds say it all. We have about 60 members that are very sophisticated in what they do. And then more importantly, the use cases, they need to enhance your workflow. They need to be able to save you time so you can go out there and be with your clients. So thank you all for attending the webinar. I'll leave you with this. There's a QR code. If you want to take out your smartphone, go to your camera app and simply hover over the QR code. It's going to take you directly to our investment advisor page on our website. And there you'll be able to fill out your information and request a demo with our team. So over to you, SK, for the Q&A portion. Feel free, everybody, to, again, as we're going through these questions, check out our QR code and go to our website.
Thank you, Josh. Great presentation. We also have some wonderful questions in the chat window. We'll try to get most of them with the time we have at hand. First one, how can investment advisors ensure that their AI tool is reliable and trustworthy in making investment decisions?
Yeah, those are very good questions, I think, or that's a very good question in itself. I think number one, you want something that is going to be explainable, right? We talked about that, and being able to provide reasons as to why a recommendation is being made. So very explainable for you to translate that to a client conversation. Number two would be the quality of the data. We kind of talked about that as well. When you know that you're partnering with quality data and those partners there, you are confident in what is being recommended. And then number three, we don't just put this all out there for you. We actually measure, in addition to our performance, the accuracy, right? So AI accuracy in terms of the number of correct predictions that we're making, this is simply, something that a traditional approach wouldn't really be able to measure. So I'd say those three things.
Thank you. Next one, very quickly. How can investment advisors measure the effectiveness of an AI tool in their investment process?
Yeah, so effectiveness can really be measured in many different ways. Does it really save you time by merging multiple tasks into one? Is it producing results that are, really going to make you happy, whether you're looking at risk-adjusted performance or, simply like having support material from the client meetings? Does it, and I think one of the biggest ones too, like, does it really make you market yourself as a tech-forward leader and differentiate your services across the board? Because at the end of the day, you want to be able to implement something that's going to help you from an overall sense of your business.
Thank you. Are there any regulatory or ethical concerns related to using AI in investment decision-making?
Yeah, good question. We addressed that a bit at the beginning, where again we see the regulators getting on board when it comes to artificial intelligence. So the way that their surveillance over the equity markets or debt markets, that is definitely something that's been implemented. But I think they're all on board when it comes to having a smarter, more efficient market and being able to digest these large amounts of data. So I think AI allows you to do that. We're making smarter decisions. We're creating a more efficient market. And we also are addressing, from their lens, suitability requirements that allow us to be more prepared when we're having those conversations with clients.
Thank you, Josh. We have time for just one more question. How do AI tools assist investment advisors in identifying market trends and making informed investment decisions?
Yeah, so I showed you guys the word cloud on our strategy page. I think that's a really good visual to show you how artificial intelligence, or mainly our algorithm, is shifting and robust to those different regimes. So we talked about inflationary periods. If we had a GARP-oriented model, maybe we're tilting more towards value characteristics, and our model's able to outline that. I think we could also see it from a different lens, where we're looking at the watch list page and seeing different viewpoints and seeing how ratings change between a value strategy or a momentum strategy or a growth strategy. I think that's going to be able to help you identify certain trends and be more informed when it comes to those decisions.
Wonderful. With that, we're at the end of our allotted 30 minutes. To our attendees, if we could not answer a question you asked, we will reach out to you with an answer. Also, thank you for taking the time today and doing a great presentation, Josh. I'd like to thank everybody who joined us today. The presentation recording will be sent in an email within the next day. Have a great rest of your day, everybody. Thank you.
Take care. Thank you.